Well, I think this is an interesting week because we do have the PMI data coming out this week, which will be important. And I think there's a few things to watch out for in there. Firstly, exports. Last month, exports did slow down. And I think, as we know, not just for China, but the region, exports, certainly stay-at-home goods, electronics, has been a major mainstay of growth in some of these countries. And if we do see more signs of slowing, that's going to be important. Also, price pressures. We know that input prices have been pushed significantly higher because of higher commodity and raw material prices. If we see continued elevated prices on raw materials, on input prices, that also could be quite important to watch out for. But overall, we think the PMI will moderate slightly, so still in expansion. But I think the boil really, the data has really come off the boil in China. So I think we are starting to see a little bit of loss of momentum from the very high levels that we've seen in recent months.
But Mitul, could this be the old bad news on data, if you want to put it that? I'm not sure it's too bad at this point. It means good news, though, in the sense that expectations for any tightening out of China will fade, or at least ease, because this is coming at the same time, as you point out, that authorities are worried about price pressures, at least on the production side.
Right. It's a good question. I think, Nancy, the reality is that China is probably unlikely to hike its loan prime rates or its policy rates in the months ahead. We think they're going to focus on liquidity. We know that there's a big issuance of government bonds in the next few weeks, and I think liquidity could tighten. So it'll be interesting to see if they infuse any liquidity into the market to try and dampen some of that. But overall, I would imagine that we're going to see these sort of stable liquidity conditions continue in China. It will mean that they're probably going to be less focused on monetary tightening. I think where we've got to focus on is a credit impulse. Credit is slowing down. That impulse is weakening. That has major global repercussions, whether it's commodity prices or just Chinese demand in general. Credit growth in China is slowing and is likely to slow further. And I think that is also something important to watch out for as China continues to push towards its deleveraging agenda.